Okay, so hey guys, welcome to another trade review. So as usual, I'll show you guys from narrative to execution. Show you guys why was I going long, why bullish or bearish. So let's jump right into the trade review. Okay, so this is basically the last trade of August, the last trade of July, and August January we don't trade. Yeah, so just looking at the downside because basically we have a big premium opening range gap which is outlined right here. So that's why during the opening range, which is the 9:30 to 10 o'clock, within the first half an hour, generally is the bias is towards the midpoint of the opening range gap because retail will think, oh, my stocks open higher. That's why maybe I should go long some more. And that is exactly why it is very beneficial for smart money to and the algorithm to take price back down to the midpoint to clear all the sell side because generally when people feel good about the market they tend to gamble. And yep, at first I did measure, okay, first criteria hit, which is the most important one. It allows 20 points stop loss, and the second one is we have the first presented fair gap, so that is a very good PD array for me to use for my entry. But the problem is we have 10 a.m. news, so I did not want to trade ahead of high impact news. Yeah, perhaps because of um, my lack of conviction towards this trade. But this is one of the trades where I would like to keep honing myself to increase experience and conviction to just take all these kind of trades, just scout for the midpoint or maybe the upper quadrant, because you see the upper quadrant right here is a pretty handsome nice short scalp already. And you can see I waited for confirmation, price did trade up to the 9:30 first presented fairly gap, and we were bearish. So but I just didn't want to trade, so it was a hypothetically where I will use for entry. Okay, where is specifically here. I was planning to use this as an order block for and continuation because I know price is going to run, and we are close to 9:50 macro, so it's 9:48 right now. 2 more minutes, you're going to see movement, and boom, there we go, 9:50. And yep, so like I typed there, if we didn't have the 10 a.m. news, that would be a take profit target because I will only trade with one contract. And because looking for a trade, I did told myself that doing all this, you just don't touch your demo account, just do things like that. And then we go, upper quadrant was tagged, so it would have been a easily 60 points, risking less than 20 points, means risking less than 1% for more than 2%. Yep, so I'm just typing why I did not trade. But yes, like ICT said, this is one of his model that he introduced, which is using the first presenter failure gap. This is, if I'm not mistaken, Caleb's model also. So yeah, now looking back, definitely, in hindsight, because it did pan out. But to me, I want to just, as long as I have trades like that, I'll take it. Ever since after this trade, then I will just close my trade before 10 a.m. news if I'm not comfortable to hold it uh in into the 10 a.m. news. So yeah, then we have immediate rebalance. So by right, okay, by right, actually this 0.5 level will have been hit already, but it did not hit it. So my thinking right now is if it turns from here, it is a potential bullish trade. And what I outlined just now is just the opening range, which is 9:30 to 10 o'clock, the high and low. So the opening range high and low is basically what I outlined. So right now, just looking at how we want to use the opening range gap quadrant levels. And like I said from the start, I was bearish from the start already because we were looking for London lows and looking for new day opening gap and the new week opening gap. So all these are discount. When we're looking for low means we are looking for price to trade from a premium to discount, and it did pan out here. And my draw was still the sell side, which is 22541 London sell side. Boom, there we go. Tag. So if it continues lower, I'm typing. If it continues lower, we have the current new week opening gap. And this, if I'm not mistaken, we have our first trade right here. Yeah, I basically use that as a fair value gap for entry, aiming for the new week opening gap, and we are 40 points away for it, which is an easy 20 points, I would say. Yeah, and just looking for the opening range gap, um, lower quadrant, and we have it coincide with the new week opening gap, so it's quite close. So that's quite um, it's quite permissible for it to do it. And as you can see, I got stopped out right away. And yeah, just typing myself, okay, small loss. There's another chance because generally I only reach 1% max a day, so I still have half more percent, which is another 10 point stop loss trade. That's why you can see that I immediately reduced my measurement to 10 points, so I do not chase any entry and price. And right now, why did I think that price want to turn? Number one is because of how we have a swing low right at the midpoint of the opening range gap. So this is when generally okay in the in the low resistance run, we will want to see price turn, and then we also have it that small little bullish market structure shift. But why did I not take this trade? It's because this swing high was not taken yet. Okay, I want to see more displacement in order for me to trust it as a setup. So that Venom is just it might just turn out into a Venom. Okay, because we did taken out London lows, and then we did taken out the opening range low, and we have a three drive pattern right here. One, two, three. Taking out here some more. So pre-market sell side into opening range gap sell side is all already tagged, and this is what ICT will call maximum carnage. Yeah, my bias is bullish also because since we're in a deep discount, basically the opening range equilibrium will be a nice and easy target. And yep, there we go. We have displacement from the Venom, and that is right on spot why I was waiting. I was waiting for something like that to show me that price wants to hit to somewhere. But in the end, it did not do so. That's why you can see that I did not place any order at all. So right now, just waiting, just looking, waiting for time because it's a high resistance run. See, I said high resistance run. Wait for 1050 macro, and ball is all above the Venom, which is this. And so time distortion is basically we are just waiting for time. And I'm thinking like, oh, 1050 maybe time where you want to move. And usually what macros do is macros will move towards the untouched liquidity or fill up inefficiencies. And right now, like I have said, why did I switch gears to being bullish for this session is because we have multiple lows taken already, and we have untouched highs. Opening range high is still not taken, but opening range low is already taken, and we are above the midpoint of the opening range gap. So it's multiple confluence right here, and right here we are basically in a low risk region where it's good to hunt the setup, and that is exactly what I want to see, a bullish market structure shift. There you go, 10 point, boom, we are in again. Yeah, you're gonna see me get out again. Yeah, just looking, I just want to see it act as an order block right now, and it did not do so, and it just punched through, and that's why we use a stop loss. Because if it breaches the old order block, okay, just let me just go back a bit. Yeah, if it breach this order block, means it basically want to trade lower. That is exactly what I mean. Okay, why is it an order block? ICT have not shown in depth, but to me, studying ICT for so long had made me realize that ICT don't just simply name his PD arrays because it sounds cool. He named it because there's a reasons to think, like, actually it's just a down close candle or up close candle, but all that matters is actually where is it formed, when is it formed. So to me, why is this an order block? It's because, okay, it's because, okay, I think I was seeing somewhere around, okay, why did I expected that to be an order block? Because like I mentioned just now, the venom is already used. Okay, so in a efficient market paradigm, we would expect it not to use what it used already, because that is only considered as efficient, right? And actually price have no need to even breach this low already, because it already taken out this low. And if it's a low resistance run, and if we are on site, price will want to reach up to a premium right here, right here, right here. Price will want to reach there as fast, as quickly as it can, to to just offset those people that were lucky enough to go short. Price don't want to give them, the algorithm don't want to give them chance to back off. They will just want to just cut their head off cleanly, just take them as liquidity to take profit. Because if smart money buy here, they need to find somewhere where there is willing sellers. So willing sellers are all the stop loss. Okay, sorry, yeah. If smart money buy here, they need to sell for profit. Yeah, so they need willing sellers, and basically all the willing sellers are all right here, right here, right here. No, if there were, oh, they bought it from the willing sellers at the sell side liquidity. Okay, then right now, if they bought it, they need to sell for taking profits. And where are the willing buyers? Oh, sorry, okay. So where are the willing buyers? Right here. The buy stops. Those people who trail their stop loss right here, right here, those are liquidity for smart money to offset their position. And that's why this, based on context and narrative, it should act as an order block in a low resistance run. But did we have a low resistance run? No. And then you can see that, what were the logic? Why did we use stop loss? First, we do not want price to breach here. Because if price breach that fair value gap low, this candle low right here where my mouse is, it is most likely you're going to trade lower for the new week opening gap. And did it do so? There you go. We shall see did it do so. I'm just journaling here actually. Okay. And actually I also wanted to take this trade, but taking this trade will cause me to break my rules. And if I break my rules, although it's just an extra maybe 10 point stop loss, but if I had broke my rules and I turned out to be wrong, what will I feel? That was my thinking, because I knew, okay, I knew probability was on my side if I just take this short scalp to mitigate. But I asked myself just this two question: that is it really in a hurry for me to get back what I lost just now? The second question is, if I'm wrong, okay, let's say if I'm wrong, what will I feel? So it is the last day of July trading, and August, the whole August, I won't be trading also. So if I had lost this, my last month profit will be just like 2%, will be less than 2%. And for me, I want to keep the profits. So that's why I did not take this trade, and I just think hypothetically this is where I will mitigate. And it did it in stunning manner. 1050 macro trades up to that fair value gap, boom. Use the Venom as an inversion, boom. Just like that. Yep, and also one thing I've done here that is something that I wouldn't recommend myself to do it again is trading before the macro. Although it was like 1044, it was quite close to it. But I did not know for sure if price wants to continue higher or lower. But what gave me confirmation was that market structure shift. I thought, okay, we have the market structure shift, the bullish market structure shift, which means price, the algo will be shifting into a buy program. And it just decided to trade lower. So, did I do anything wrong in this instance? No, because my stop loss was placed based on, okay, it's 10-15 macro, don't do what I want to do. It will probably go for the lower side. And if it goes for the lower side, if it breaches the order block and then the fair gap, like what we see here, we will trade lower. And what target will it be? New week open gap. And can you see right here, it was outlined way before already. So I just it's really unbelievable how I'm able to read price right now. And yeah, you can see, I can fucking read price right now. Man, I tell you, like maybe 2-3 months me ago, I'm still shocked by my progress. But still, trading is trading. Reading price is reading price. So I'm gonna hold myself, keep doing the right thing. Looking at my stats right now, yes, risk management is behind. So adding up with my ability to read price, it will go be bonkers. So yeah, I think I'll talk a bit about yeah, maybe I'll stop here first.